Morning, afternoon, and evening to everyone, depending whereabouts in the world you are. My welcome to you to this webinar today, and thank you for attending. If I introduce myself first, I'm Chris Whitehead, Chief Executive of FINSIA, the Financial Services Institute of Australasia. This webinar is being conducted in association with our friends and colleagues at the Asian Institute of Chartered Bankers and Chartered Banker Institute in the UK. As I say, thank you very much indeed for joining wherever you are in the world. Firstly, if I can, something we do as a tradition, matter of policy for FINSIA is take the opportunity to acknowledge the traditional owners of the country. So before I introduce the panel, I'd like to begin to acknowledge by acknowledging the traditional custodians of the land on which each of us is participating in this webinar. We may be physically far and wide, each of us is on the land of the traditional owners, and I'd like to pay my respects to elders past and present, and to any First Nations people of Australia with us today. Welcome to today's webinar, which is about the impacts of COVID-19 and how do we see ourselves moving forward now. COVID-19 has such an enormous impact on our countries, our economies. It's a pandemic, a health crisis, but also a financial crisis. And banks and financial services generally have been at the centre of that crisis and are very core to supporting our economies through the crisis and, of course, beyond. And I'm delighted to welcome you to this webinar to talk about this. So we will look beyond the current situation with COVID-19 and discuss how banks and bankers globally are working in partnership with governments, regulators, businesses, customers, and society more generally to ensure the future of our financial system. So it gives me great pleasure to introduce you to our panel of leaders. Firstly, Mr. Lee Loong Yen, the CEO of Citibank Malaysia, Uday Serene, Chief Executive Officer of ING Bank Australia, and Yuki Yasui, the Asia Pacific Coordination Manager at the UNEP Finance Initiative. I'll let you know how we're going to run the webinar. We will have introductory remarks from each of our speakers, and then we're going to have a discussion, a Q&A. We're very keen that you participate in that Q&A. So you will see at the bottom of your screens a Q&A function, a Q&A button, which you can click on at any time to ask questions. We'll take the questions through the Q&A period, but do feel free as we go through the presentation so that we can manage those questions. And we'll try and pick these questions at an appropriate time. Now, business continuity, constant source of thought for us. As is the norm now, we're in different locations globally. Indeed, we're presenting from 5 different locations in 3 countries. So if it's not quite as seamless as it might be, I'm sure you'll understand that. We do have a business continuity plan, so if one of us drops out, please be patient. We will recover, and we have plans to keep going until those that have dropped out can reconnect. Maybe if I can move straight on to the sort of initial question, the opening remarks for our speakers, and ask you to comment on how industry locally is working with government, regulators, other key stakeholders, how this may need to evolve over the short and medium term. Can I firstly ask Yuki to provide us with some opening comments? And indeed, I know you've got some presentation slides. Over to you, Yuki.
Yes, good morning, good afternoon, everyone. My name is Yuki Yasui from UNEP Finance Initiative. So for those that are unfamiliar with UNEP FI, just like to give you a quick introduction of that first before we talk about what UNEP FI has been doing with our members on the COVID response. So UNEP Finance Initiative is a partnership between the United Nations Environment Programme and financial institutions all over the world, banks, insurance companies, and investors. And we are largest in Europe, but also quite big in the Asia Pacific as well. So what we've done, so UNEP FI has been working since 1992, the first Rio Earth Summit, and it's developed 3 key principles on sustainable finance. The first one you might have heard is the Principles for Responsible Investment that was launched in 2006. Today, the PRI is outside of UNEP FI, but we are still supporting them. And so the PRI is calling themselves a UN-supported initiative. In 2012, we also launched the Principles for Sustainable Insurance. And then the latest one is the Principles for Responsible Banking, which was launched just last year, 2019, with 130 signatories from 49 countries around the world. Today, we have about 170 signatories representing about 50, I think this is, the figure is wrong, it should be in trillions. But the Principles for Responsible Banking has been actually a very good framework for banks to think about their COVID response. And what we have been doing at the Secretariat is we've done a few webinars, 4 webinars for members only, to share their experience of what a responsible banking in a COVID crisis would look like. And we had over 300 participants attending those webinars during April and May. Also, we have been showcasing our members' responses in our website, so you can go and visit them even if you are not a member of UNEP FI, that shares the current, which is the immediate COVID-19 responses, and there are already over 70 cases on our website. So just to give you a quick run through of what they were, these, just to caveat, are the immediate responses that happened in our members between February to April. So the first thing is that banks are essential services for the economy, so keeping the branches open and keeping the ATMs open while protecting the employees has been a key response for our banks. Also, helping customers to access online services and expand the call center services. And then for some countries, the banks have been given the role of paying their pensions or social benefit payments. So some of the banks have provided advance payments on those. Then there are the other pillar, which is under our Principle 3 of the Principles for Responsible Banking, the banks are committed to work responsibly with clients and customers. And based on that Principle 3, banks have been sharing their experiences on how they are helping clients and customers in times of economic hardship. So some of the examples are here, which is, first of all, expansion of credit, especially to the SMEs, lower interest rate, some fee waivers on transactions. There's been some repayment breaks for mortgages and SME loans, and faster processing of applications for credit. There's been some automatic renewals of loans as well, and more financial advice provided by some of our bank members. There's been some preferential lending for the healthcare sector among some of the banks, and some banks have been helping connect their customers together in the same supply chain. And then under Principle 4, which is to proactively and responsibly consult, engage, and partner with relevant stakeholders, there has been partnership with the government and the community on these, and they include things like participating in state guaranteeing loans and government loan schemes where it's available. Some banks have been supporting the COVID-19 municipal bond issuance in Germany or in other countries. And then for the board members of the banks, there has been some bonus waivers, there's been some donation drive, and supporting the suppliers, the bank's own suppliers, making sure that they are paid in time, and if and when they aren't able to deliver the service, that the banks will still honor the contract. These are all very short-term responses of the COVID crisis. And now we are starting to discuss internally within our members about what will be the more medium to long-term response. And I just want to finish by just giving those quick overview of that. We've identified 3 main areas for banks as responsible banks, how that would look like. And I guess the overall framework is what is the bank's role in building back better? And the first one that we've identified is how can banks help a green economic recovery, making sure that our recovery is sustainable. The second one is about inclusiveness and equality, because we've seen, especially in some of the emerging markets, that a lot of the hard work in getting a lot of the population out of poverty has been eroded through the COVID crisis, and a lot of people are back to poverty. And so as a bank, it's really about how do you help financial inclusion, especially how do you help the local SMEs. The third one is about the operations within the bank, and this would apply not only to banks but any big businesses in general, is how can we make the back to work strategy to be supporting and in alignment with climate change and the Paris Agreement. So there are some studies that say that if we could keep the business travel down even after the COVID crisis, and if it can be down by 40% from before the crisis, we could get the aviation sector to be aligned to a 2-degree pathway by 2030. And if we can keep the professional sector to stay working from home, not always, but on a fairly regular basis, and the recommendation is 3 days work from home, that would help the passenger transport to be also aligned to the Paris Agreement. So those are the green economic recovery, financial inclusion, and back to work strategy aligned to the climate change are the 3 big pillars that we are currently discussing with our members. Thank you.
Great, thank you very much indeed for that introduction, Yuki. And fantastic to have all those case studies available, a lot of information available on the website for those 70 case studies. Now I'd like to hand over to Mr. Lee Loong Nguyen, CEO of Citibank Malaysia, for his opening comments. Thank you, Loong.
Thank you, Chris. Firstly, thank you for having me on. It's an honor to be here representing AICB. Now, obviously, we're in a situation that's, I think, in most people's lifetime, we've never come across, right? It's complete stress. It's equivalent to modern day warfare. It is extremely stressful. This crisis is unheard of, and it's in incredible proportions. One of the things that we have looked at, and I mean, when we look at a local level with government agencies or with regulators and all, is that for the first time, I've not seen so many agencies pulling resources together, coming together for the same goal, right? Getting funds out to clients, getting funds out to the people, safety of people, safety of employees, encouraging people to work from home, right? I think, you know, it's great to see how both the private side, the public side, working together. One of the things that's obvious very quickly is the narrowing of relationships. What I mean by that is, what I see is how in the past there was a lot of formality between, say, a regulator and a bank, that formality has kind of softened a bit because everybody is trying to work together as quickly as possible. I mean, everyone needs to be nimble, everybody needs to be agile. And it's one of the things that I realized that we're using different channels these days. And I think these are the channels that will move forward in the short to medium term. I mean, in the past, it's always been making that phone call, formally going to see the regulator, going in to go and look at, have that face-to-face meeting. But all that's kind of out the door because we have to work fast to solve a problem. Timelines have been compressed, right? So different channels, I mean, we're on the phone all the time. We're on video conferences all the time. I mean, we are here, there's like 350 of us on this webinar, right? Channels that we didn't think we'll work on is like on chat boards, right? On our phones, whether it's Line with, or it's WhatsApp, working with rubber. In the past, we would not think of it that way, but regulators are trying to reach out to the industry as quickly and as efficiently as possible. So, I think communication channels going forward will continue in this sense, in a way that it's going to be as efficient as possible. So a lot of the formality, I think, will go out the door, right? I wouldn't say, at least for the medium term, because we are all here for the same thing. So obviously there's a lot of learning, how behavior has changed. So between all the agencies, I see agencies also working together, whether it's the Association of Banks in Malaysia, working with the American Chamber of Commerce, right, with the regulator and the Ministry of Finance. And behavior in terms of how things are rolled out. One thing good I've seen here in Malaysia, and I compare it with other countries, it's how the central bank here in Malaysia, when they rolled out their moratorium for loans, they made it automatic for mortgages and for personal loans. It's automatic. Everyone gets the moratorium. And if you don't want it, you have to opt out. Unlike some other countries whereby it's opt-in. So the paperwork within the banks pile up, right? It's like who wants, who doesn't want. As compared to here in Malaysia, which I think the central bank has done a great job, everyone gets it. If you don't want, opt out, which is probably something like 10, 15%. So, behavior in times of crisis, in times of war, which how I would, look at this. Everything has been compressed. Timelines have been shortened, right? Even for myself, right? The strategy that I think Uday will comment on this as well. How we as banks, what we had planned in January for December, the full year forecast, that's out the door, right? I mean, whatever numbers we put in, that's going to change big time, right? So, everything, now our objectives are monthly objectives, weekly objectives. It's no more, let's have that great strategy for the full year or the 3-year plan. You can plan 3 years down the road, but let me tell you, a lot of that, if you had planned that in January, that would have changed quite significantly. So, I'll just leave it as that, and I'll hand it over to Chris and Uday.
Great, thank you very much indeed. And I know we'll be exploring a few of those points in our questions. Great to see we are having a number of questions coming in already. And just a reminder, you can access that the Q&A button at the bottom, not the chat button. So if we can put all questions through the Q&A button, please, that would be great. And Uday Serene, CEO of ING Australia. Uday, your comments, please.
Thank you, Chris. And it's great to be here. Thank you for having me. And, just to take on from what Lung was mentioning, the way I look at this is, clearly we're probably at the end of the beginning right now. It feels like that. And on one front, of course, we're seeing what we've done, just navigating COVID-19 in what I call the short term or the immediate term or the mobilization phase, and we're now coming to the end of that. And that, of course, had primarily three focus areas. The first really being the welfare and the employee safety and well-being. And that was the immediate focus, and that including the new ways of working. I recall pretty much
now it does look like we've had Uday freeze on us. We'll just give Uday a few seconds to hopefully reconnect. Otherwise, what I'll do is I'll start off with the first question to give Uday time to come in. So we'll just wait for a minute or a few seconds. All right, lost date. He'll know that rejoin us. We'll just wait a little. We'll just wait a few seconds. See if he can rejoin us quickly. No, well, look. While we carry on, perhaps, Lung, can I ask you a question? Which is, you spoke a bit about how timelines have compressed and so on. We could talk a little bit about how has your leadership approach and style changed during the crisis, and and is that a long-term change? Is that a ongoing change?
Yeah. So great. Actually, thanks for that great question. I get the question quite a lot. So obviously, timelines changed, right? It's now no more your yearly schedule, your quarterly numbers, your quarterly strategy. It's now weekly. Now I go back to maybe March, April, when the crisis first started. Everyone was scrambling because everyone didn't know what was happening, right? So timelines were then weekly or daily timelines. At most, it's 3 weeks down, right? Setting objective, trackable timelines. At times when we had problems, it would be, or didn't know what the situation was like, we would say, okay, let's meet again in 3 hours time. We'll scramble, come back 3 hours, take a decision. So that's one. The other thing that changed was my management team. We used to have, well, I won't say we used to, we still do, management team of say 16 people. It's now down to 4, right? Simply because we had to make fast decisions. So for me, it was the ONT head, my head of services, hub services, and a senior ONT person. The whole idea here was, the whole idea here is, if you have too many people in the room, if you have a war room, and you've got 20 people giving you ideas, opinions all the time, you're not going to get anywhere. It's pure confusion, let me tell you, because everyone's excited, everyone's got an opinion, and all those opinions could be right. But the thing is, you need to be able to distill those decisions. The problem is you don't have time, right? We wanted to move everybody out, to move back home. What sort of resources were required? Technology, what sort of technology did it need to have? That sort of thing, right? What sort of protocols do you set in place? So 4 senior people sitting around the table, making quick decisions, right? Roll it out. Now, you make a fast decision, let me tell you, you'll probably be wrong, right? And we were wrong a few times, right? It happens. But the thing is this, when you get it wrong, you roll back, take a step back and say, okay, how do we tweak these decisions, right? As long as the direction is right, whatever true north is, you're going in that direction, you might have a little detour, but you come back to it. So that's another thing, right? Making your management team small. The other one is making fast decisions, right? in the good old days, we'd sit around the table with, a little campfire maybe going, and everybody is like debating, having a discussion, throwing ideas out. And you don't have time for that. You got to make fast decisions. So that's one of the things, right? Nothing is over communicating. So the fourth point I would say is over communicating, right? So let me finish off with this last point of over communicating is, everyone's working from home now. Here at City Malaysia, we've got 90% of people working from home, right? So everyone's kind of isolated. Now, they still need to be loved. Let me put it to you that way. They still work for your organization. They don't want to be forgotten. So over communicate. So that's what we've been doing, right? Emails, town halls, just any way to make sure that they still know what's going on in the organization. So over communicate with them. All right. I'll just hand it back to you, Chris.
Right. Yeah. No, thank you for that. And look, actually, Uday was telling me a bit about the town halls and meetings and engagement at ING Australia. So he may comment on that either in his the remaining part of his opening remarks, or we'll pick that up through a question later. Uday, thank you very much for rejoining us. And yeah, we as saw we made useful, good use of the time, but look forward to carrying on to hear from you.
Yeah, sure. Thank you. This is COVID times, so we're a bit digital in and out, but I'm back. Yeah, so just to round off the point, really in a short-term mobilization phase, focus on people, focus on our customers. Here in Australia now, we've across the banking industry, we've crossed over 500,000 customers where there has been financial assistance and packages really across banks. And as we get to the end of the beginning, now really navigating to this and moving to what I call the slightly more response and medium term and longer phase, where we're seeing that, clearly in the long run, what are some of the changes that we're seeing in consumer behavior, in terms of client needs for products, maybe a change where we could see generally becoming the client needs becoming less consumption driven or more preventive and risk averse behavior, and what implication that has for banking. Looking at our cumulative bank portfolios, what's it going to look like over the next few quarters? What's the sensitivity in terms of some of the macroeconomic trends to our portfolios? And we're now getting into that phase, apart from, of course, really the new way of working in ensuring what's the efficiency of work which is being performed remotely, and the opportunity to really move forward on that. Was mentioning that 90% of the team is now working from home, and clearly we're seeing the opportunity with higher productivity and higher efficiency in certain parts of the bank. And how can we take that forward? For example, we've seen in ING in Australia, we used to be about 15 to 20%, working remotely. I wouldn't even say home, but remotely and from mobile working. There's an opportunity for us, I think, to double that and make it in a way irreversible, to take that 20% to 40% over the next 3 to 4 months. And, as we start to get into the more medium phase. So let me stop at that, clearly looking at our short term and medium to long term.
Great, thank you very much indeed, Uday. And yeah, I think that working from home, I saw Yuki nodding a couple of times. Hopefully we'll get to explore that a little bit, some of the positive impacts of kind of working from home environmentally and so on, and how that supports those. But I thought we'll kick off with a question, if we can, which has actually come from one of the audience. And it really kind of harks back to the GFC and says, have banks and their leaders learned lessons from the global financial crisis? Do you think they'll take the opportunity that the COVID-19 crisis presents to build a new social contract between themselves and society? And of course, that contract or that perception does vary from country to country. So I understand there may be some variation in the answers to that. But perhaps maybe ask Yuki to have kind of first go at that question, and
Yeah.
Yeah.
Okay. So yeah, so the principles for responsible banking already embeds the notion of the purpose of banks being useful to society and to the community and the environment. And so we think that whilst the financial crisis was a product of the finance sector, this time we are able to, the banking sector and the financial sector in general are able to be helpful and useful. And I think it's an excellent opportunity for the banking sector to provide and to realize that their purpose of being is a useful one and not just greed on themselves. So a lot of the banks who are PRB members, the Principles for Responsible Banking members, are looking at how to expand their positive impact through this crisis. And there's a lot of government action anyway, and a lot of expectation from society for the banks to have a useful role in supporting the recovery. So it's an excellent opportunity for the banks to, and we are already seeing the credits being expanded generally amongst the banks worldwide. And so the main questions that we have with our members is how do you maximize your positive impact through this expansion of credit whilst managing your risk? Thank you.
Great, thanks, Yuki. Either Lung or Yude would like to kind of add any further comments on that question? Yude, you're muted. Sorry, Yude, you're muted. Great.
Sorry.
Okay.
We have to go through a conference call without that happening. But clearly, the point I was making is twofold. One is this time around, post the GFC, in terms of the question being, what are the learnings? What we've seen across the world, really, the actions in unison between central banks and governments and banks across the world, coordinated, quick, and going hard and going fast in terms of being well capitalized and liquidity actions being taken. So, for example, in Australia, we saw really across the banks when we launched pretty much over the weekend, the financial assistance packages, and Nung was mentioning the fact that it was opt out in Malaysia, and that clearly I think is different from the experience of the GFC. And the second point, I think Yuki mentioned that it's almost like in some of the countries and specifically in some markets and for some banks, it's a bit of a by proactively extending the support, it's almost a redemption opportunity from a larger trust perspective for banking that we've seen. And I think banks have stepped up to that plate in terms of it being just to regain some of the trust across customers and communities.
Right, thank you. And Lung, perhaps a Malaysian perspective on that and the kind of social contract in banking.
I think we've learned a lot from the crisis, right? Responsible finance, how we communicate with clients, all that coming out, and actually central banks have learned from the GFC as to how to implement policies, implement procedures fast, to what Uday and Yuki has said, right? The whole idea here is efficiency in terms of crisis. Banks are now all well capitalized as compared to 12 years ago. So it's not the banks that are going to be in trouble this time around, I think. you know, but I think a lot of the learnings from GFC will be or has been put in place, and we will come out better, or banks, financial institutions will come out a lot better because of that.
Great, thank you. A number of questions here, and a couple from David Ng, but a few others as well that essentially go around the topic of digital banking. So there's been this acceleration in digital banking because of social distancing and so on. A lot of new customers have migrated to digital channels, and so questions around, you know, what's the impact of that? Is it temporary? Will they go back? And also the questions around controls, the things we used to around things like KYC and all the control processes, confidentiality. You know, good question here in terms of if you're working from home and you've got customer details on your screen, you know, what about members of the family walking behind you reading those details? And these are all things we're quite rightfully, you know, a bit paranoid about as bankers, the confidentiality controls, those kinds of items. So the impact of kind of, you know, digital and that shift to digital, maybe focusing first on the customer impact. Uday, perhaps if ask you to kick off on that one, given ING Australia is essentially a wholly digital bank.
Sure, Chris. I agree. I think there is, like remote working, adoption of digital channels and the whole digitalization process, so to speak, for banking, I think has got a serious impetus, which is in many ways, you know, is irreversible in the sense that it goes to the next step. There was a question on KYC. You know, we've here in ING in Australia, 99% of our customer interactions are digital. And this, of course, is that's really the business model that we have. And access to customers is 24/7. The only 1%, which is non-digital, is you know, the 10,000 odd phone calls that we get on a daily basis up at our contact center. So you know, clearly, I think whether it's KYC, using digital ID, using various digital ways to interact, is here to stay. And we, again, while there are various headwinds of the crisis, you know, the whole focus on growth and innovation and move towards digital, I think is a clear tailwind, which the sector has. And you know, we've seen, of course, we've always had that model, but across the board, we will see more and more customers adopting those channels. And what can be achieved through digitization, I think Luke mentioned that we're now, you know, just not only customers, but just the operating of the bank. You know, yesterday we had our supervisory board meeting completely from across the world and digital, something which, you know, we've always had face-to-face. There has been an element of virtual and online, but now that's really par for the course.
Great. Can I just add to that? Yeah, you know, I'll take a step back. When I first came to Malaysia, when I took on this role a good 6 years ago, I had to do this SWOT analysis, right? And under the weakness box, we had lack of a branch distribution network. As compared to a local bank, they've got like 200-300 branches, right? So back then, I put that down and say, I can't compete with a local bank. But about 2 years ago, I've taken that off, right? I don't want branches, you know, like Uday, you know, I would want all my customers to go online via mobile. That's the way to go. However, the thing is, we got to think about our legacy systems, right? You know, we've been in this organization a long time, you know, as compared to a new fintech that comes on board, no legacy systems, no baggage, easy to plug and play. But for banks that have been around a long time, our legacy systems, you know, to migrate to a new system, that will take a while, right? And then at the same time, we've got to look after our clients, our long-standing clients who are perhaps the aging population, who really want a wet signature, right? Who needs to go to the bank. You talk to my mom, who doesn't have a mobile phone, a smartphone, or my dad, who doesn't have a smartphone. It's going to be difficult for them to do banking, right? Do digital banking, that is. So, like everybody, I'll bet the fact that we are all here, all 411 of us on this webinar, I bet you everyone, 99.9%, everybody here has got a smartphone. But then again, there's the legacy that we mustn't forget, right? And banking is like for everybody. We still have to look after our mas and pas who don't have that capability. So it's something that it is the future, but I would say, digital banking will continue. It will, the legacy number will drop, and, a good 10 years down the road, it'll be 100%. And I always ask my kids this, right? It's like my friend who's always driven a Tesla. Kid is, he's got a daughter who's 5 years old, who's never seen a petrol station, because charging has always been at home. Same thing, when I speak to my kids, right? They open a bank account, and since that day, they've never once stepped into a bank. Right? So, it's the way to go.
Yep. Yuki, I know we've lost your video. Would you like to add any comments with regards to that aspect of digital banking and the shift to digital? Good, bad, bit of both?
I don't have that much to add, except to say that I think once people have experienced the digital banking, and if they've had a good experience, that they will stay even after the COVID crisis finishes. So I expect that the digital age will stay and expand, and that we won't go back after the crisis. Thank you.
Thank you. Great. All right. We spoke earlier about, and I think quite justifiably, many of us are very proud about the way that our organisations and people have responded to the crisis, have supported customers, but perhaps a bit of a challenge. Maybe as we are talking about post the crisis, a few months down the line, and people perhaps start to see some of the consequences of decisions. So a question from Diane Edwards. Diane said that in New Zealand there's been some cynicism from the public about some bank offers of, for instance, mortgage payment holidays. Business loans are offered only for people to find out the interest will still accumulate, so the bank would ultimately profit out of the situation over the longer term, while customers may end up being worse off until they really understand the consequence of those repayment holidays. How do you balance what's best for the bank in the crisis with genuine social responsibility, where banks take some share of the pain? So that kind of balance, is that something that you'd be happy to comment on?
Yeah, I'll let Uday go first.
Okay. Yeah, I think it's a fair question. And what we've seen in Australia and at ING, we've been there, within 48 hours, at a very rapid pace, putting out support for our customers and communities in terms of financial assistance, in terms of what is now known as a payment pause, and really the government, the central bank, the banks coming together. I think what's important, of course, in Australia, while it did involve setting up the process, and there were, of course, the queues on some of our call centers across the industry went up manifold. But there was an element of opt-in, and I think there the view was that the customers are aware of what they're getting into, and for a large proportion, it was also about peace of mind, and not necessarily an immediate issue in terms of cash flow and serviceability, And the transparency and the articulation of what the payment pause was, whether it is on their mortgage loans from 3 to 6 months or small business, clearly an upshot of the lockdown and of some of the initiatives which were taken as a result of COVID-19. So it's important that there is transparency and articulation, and customers, walk in and aware of what this is. And now, as we get into like a 3-month process where there's a check-in with the customer as we renew some of these, it's important for customers to understand and for banks to assess as we take this forward. Of course, in our case, we've ensured that there's no accrual of interest on interest, and it is just capitalized so that there is no extra charges or so-called financial benefit which is accruing to the bank. But the fact is that there is accrual there is a pause of both repayment of principal and interest, and at the end of the payment pause, then customers reassess as to how their revised terms kind of occur. So from that perspective, there is a cost and there is a share which the banks are taking in offering these packages. But I think it's important that we are transparent and customers opt in and understand, how this kind of is going forward.
Great,
yeah.
Thank you.
So to add to Uday's point about transparency, one of the things that we did here in Malaysia through the central bank did was, if you've got individuals that are having difficulty to pay off their credit card, they can convert them into term loans, right? And those term loans will be at a lesser interest rate as well. So, it's not just about profiteering, but there's to Uday's point, there's a give and take, right? Banks are also taking a step forward, actually, to help individuals during this time of need.
Okay. Yuki, the idea of shared pain, if you like, between the shareholders and customers, and I'd like to kind of comment on that. That's essentially at the base, I think, of this question.
Yeah, as FI secretary, we don't really dictate, to our bank members about what they should be doing, how much pain they should be burdening themselves. It's really up to their members to decide what they are comfortable with. So we are seeing different levels of response in that area. But I do agree with the other speakers about transparency, that customers really need to understand very clearly what the payment holiday means, what their offer is. If a bank is making an offer, it has to be very clear. Thank you.
Chris,
Right.
if I may add just one point. I think, like I said, while I said that the short term is the end of the beginning, but now we are at the start of the next phase, and the fact is that banks will face relatively strong negative pressures in terms of repayments caused mostly by liquidity and problems in terms of serviceability and cash flow as businesses and households get back, and as we in the way the economy comes back, and so this is not the just offering the payment pause, and it's not going to end in 6 months. So and then we have to really look at what part of the portfolio is going to have some additional stress, and how do we then offer that assistance to customers. So there is going to be for want of a better word, if you use the word, additional pain, and that is there and the banks are very much there to take that part and offer support to customers.
Yeah, thanks for that. And yes, I think that's often missed in the discussion that, of course, credit risk has gone up substantially. That is, undebatable. But as we go into a recession, we don't know how long it's going to be. Is the V-shaped recovery or U? That we do have significantly higher credit risk out there.
I heard a new one. One. Somebody said there's a Nike swoosh. That's the other.
Oh, okay. All right. I'm going to try and squeeze in 2 questions. So just kind of position up front, so we can hopefully try and get the time to work here. We've got a few questions around risk management, some questions around working from home, productivity, and so on. So maybe we try and get a question on each. So there's a couple of questions around. Are risks just getting unsustainable? How does this impact on risk management as chief executives and your boards? You look at the risks in the business. What's your thought there? How's that changing? And the kind of the whole risk environment. There were so many embedded risks in there even before this. Yuki, sorry, were you keen to answer that one first? Yeah.
So just from the UNEP perspective, so we're and this echoes on what quite a lot of the central banks are also worried about, is that climate change risk remains even under COVID, and that's not going to go away. So there is still, the central banks and the regulators will generally be pushing for banks to be on top of and managing their climate risk, while they additionally have to worry about the other risk that is coming from the COVID crisis as well. So we've seen some regulators, like in Canada, I saw a report that Canadian firms will have to file in a TCFD report to get a COVID bailout. And so just to emphasize that, while COVID is a new risk that we will have to live with for quite a few years, perhaps, the climate change risk will not go away, and that we would still need to work on it. Thank you.
Yuda and Long, maybe a minute each on risk and risk management going forward.
Yeah.
Luke, please go ahead.
Yeah. So that was a great question, right? It's something that I worry a lot about, right? We talk about operational risk. Everyone is not in the same place. Everyone's isolated. Everyone's doing their thing. You're not sure whether the technology is 100% because it's the first time where the whole organization is working off-site. That's something that I worry a lot about. We do have now, so like I said earlier, how we've compressed timelines on a lot of things. So management or the risk management team, myself, we meet now like every 2 weeks as compared to, I think it was every month. We've got a traffic light system on looking at our efficiencies in terms of what our deliverables are, on whether our service level agreements are being met, whether, the fact that people are sending information out of the bank from perhaps office laptops, but at home. Thick fat fingers events could happen. And unlike in an office environment, response can be fast, right? In an office environment whereby if something goes wrong, you yell to your supervisor, you yell to your colleague, things get done, people jump on the problem and solve the problem as quickly as possible. Now you're isolated. Who do you call? You call somebody, and if it was, say, a treasury problem, funds may have gone out. You try to recall it, you cannot. You try to call your boss on his or her mobile phone who's not picking up. Things like that could go wrong. So it's something that, because it's only 2 months, I think, and if this working from home environment is going to continue for the foreseeable future, I think most banks will be paying a lot of attention as to how to make sure that operational risk management is going to be airtight, bulletproof.
Are you there? You still with
Yeah.
us? Yep.
Yeah. So just to top that off, I think clearly we talked about risk steering from a credit and asset quality perspective, but what's clearly heightened now, I would say one of the potential headwinds is also in terms of just non-financial risk, and as we look at cybersecurity, availability and access of channels, contingency planning, challenges in the last mile. You could have the best systems and infrastructure, but finally, when we have servicing of our customers done remotely from home, from a contact center, a person from his or her dining room, then we're really down to the connectivity of the last mile. And while I think customers are accommodating if the dog barks or the bell rings, and there's not an issue. But clearly we're dealing with a different kind of infrastructure, and in this whole what we call the triple bottom line of people, profit, and the planet. It is a different assessment of risk, which managements and boards are really looking at, and I agree, it's only been 6 to 8 weeks, so that is definitely a potential headwind as we look at contingency and access of all banking channels for customers.
Great, thank you. We're getting very short on time, so I'm just going to very quick answers on a final question, but we have got a few questions here about working from home. So given we have quite a lot of senior people and managers on the call, I can imagine they're interested in how do you manage productivity? David Tripe asked, how do we balance working from home with working from an office in the longer term? How do you keep staff engaged and connected? Some others have been to say about how do you ensure that productivity is maintained? Someone like to kick off on that one? So we're going to have to be brief on our answers, but
yeah, sure. Maybe I can give a quick perspective of what we're seeing. I think Lung mentioned about the frequency of team meetings. We've been, as a management team, actually meeting on a daily basis. I pretty much start an 8 a.m. coffee with the entire team working from home, and I've seen that the level of engagement has actually enhanced and gone up. That's one. Two, it's been quite a revelation how you can actually measure productivity, not because one is going down that path, but in remote working and systems and access, it is actually in terms of productivity and efficiency is measurable, and it's actually quite visible, and across, of course, in certain front customer facing functions, it is more visible. But I think we've actually seen an uptick in certain parts of the bank, and the opportunity is really to look at how we taking this forward, and I would also say that the crisis is providing a great opportunity to look at the structural changes to cost structure, and in terms of premises, in terms of efficiency, in terms of leveraging technology and digitization, and just the cost of servicing customers. So like we've seen almost an instant acceleration to mobile working, we also have probably a one-time window to structurally see how we can enhance efficiency and productivity from a strategic cost management perspective of servicing our clients.
Quick closing comments, final comments in that space, either from Yuki or Lung. We are just on our time, but it was
so
like to
just to add on Uday's point, I mean, he's spot on. Efficiency hasn't really dropped. If you speak to most banks, at least here in Malaysia, efficiency really hasn't dropped. But what's interesting was I did a survey and with my staff, and you know what? A lot of people want to work from home now. Give them the tools, and they are happy to work from home. It allows them to have that balance, right? Especially young parents, young mothers, young fathers who want to, have a good family environment. It's a good balance as long as efficiency, productivity doesn't drop. And we have not seen that in the last 2 months, right? So, it's food for thought.
Yeah.
Right. Now, Freddie should talk about it. Sorry, Yuki, you want to add anything?
No, I just totally support that. If there's anything good that has come out of the crisis, is that we are able to still work in the professional sector, at least, from home effectively and efficiently, and that a lot of skeptical management have been proven wrong, that their assumption that we, the staff will not work if they are not seen. Thank you.
Thank you very much. Now, Luke mentioned doing a poll of staff. We'd like to do some quick polls here. We weren't going to do these through the meeting, but I didn't want to interrupt the conversation, and we're getting lots of questions. We haven't been able to answer them all, but I'd like to quickly go through 4 poll questions because I think we'd all be interested in the answers to these. I'll ask Rachel, events manager, to put these up. We'll get your quick answers. So first of these is on trust. In some markets, including Australia and UK, banking industries face significant reputation and trust issues. Is this a redemption opportunity? We spoke a little about this earlier. So if I give you some time to input your answers there, we'll just wait perhaps 20 seconds. And everyone you should have a polling window pop up on your screens, unless you're a panelist. Great. All right. All right. So quick results there, and we'll send these out when we summarise the meeting. So interesting. That's a fascinating thing. So 71% believe a positive impact and a sustained positive. I think the interesting thing to draw out there is positive, but not necessarily sustained. So how are we going to make sure it's sustained? It's probably subject of another webinar for us. Second poll: how quickly do you think economies are going to recover? Are we going to see this kind of V-shaped bounce back? Is it going to be quite slow with low activity for a period, or a long? So again, we'll give you just a little time to respond to that.
Chris, you're not allowing panelists to vote.
No. I'm not quite sure why that is. I don't get to vote either, unfortunately. All right, so I'd have to say we're not too optimistic. So slightly, we're bulk in the middle there, 57%, looking for a U-shaped. Not too much confidence that this is going to be a quick bounce back. Next question, talking to how well government and regulators have responded to the challenge and supported and worked with the industry. So we've spoken about what the industry has done. How have the government and regulators done? Have they done well? It's been reasonable, or they could have done more?
I'm afraid of this answer, actually.
And this is one generally the panelists of the CEOs don't wish to respond to, because we like to maintain very good relationships with our regulators. Okay, so pretty positive response there, that we think government regulators have done well. And final question. Skills and banking skills. So the traditional banking skills, risk management, credit, stewardship, these skills, how important have these been? Are they important, somewhat important, not important? Have they contributed to our response? We'll wait for the result. Okay, so good news is, I think if you're with AICB, FinSIA, or Chartered Bankers Institute, is you probably made a wise decision to continue to invest in your banking skills, and we're benefiting. Well, I'm going to finish there. We have reached the end of our time. I know that We've all got lots to get on with, and apologies we have overrun by a few minutes. I would like to thank everyone for attending, thank our three speakers in particular, Uday, Lung and Yuki. We've had some fascinating insights. Thank you everyone as well for joining in from the three institutes, and look forward to seeing you on a future webinar. For those in Australia, although indeed others may be interested in viewing later, we do have a webinar with the central bank and regulators coming up next week. So the Governor of the Reserve Bank and the chairs of our two regulators talking about how their priorities have changed. So that'll be a fascinating webinar. Thank you very much indeed again for your participation, and enjoy the rest of the day or the evening. Bye-bye.
Thank you.